If you don't understand these 6 key points before you invest in real estate, specifically in the villa and townhouse segment of this market, you might be heading into a disaster. The 6 points that you need to understand is the historical supply trends leading up to what we're witnessing in 2025. Then looking at the supply and demand dynamics in 2025 in off-plan versus the ready market. You also need to understand upcoming villa and townhouse supply for the next half of this decade and how that is going to influence your investments. Also, understanding appreciation and value trends for the next half of this decade is vitally important. Governmental policies, infrastructure, and economical factors that will influence your investments going forward for the next half of this decade. And then last but not least, the entire conclusion of where this market is headed in the villa and townhouse segment. So stay tuned until the end if you want to avoid making any mistakes with your next investment. So Dubai's villa and townhouse market has undergone a dynamic shift, moving from a period of abundant supply to one of tightening inventory amidst this surging demand. This report that we're examining is examining the supply and demand trends for villas and townhouses in key residential communities of Dubai from 2025 to 2030. It covers the historical supply context that led up to 2025, the balance between off-plan and ready property markets, upcoming projects slated for 2025 to 2030, value appreciation trends, and influences of government policies, infrastructure, and economical factors. The key communities of focus includes established areas today like Dubai Hills Estate, Arabian Ranches, Emirates Hills, and the Meadows, as well as emerging developments such as Dilal Al Gaf, Damac Hills, Damac Lagoons, Arabian Ranches 3, Town Square, Al Barari, the Valley by Emaar, Emaar South, Aldar's Haven and Athlone, Shobha's Reserve and Elwood, and many others. So the goal is to provide a structured overview of how these factors and communities interplay to shape Dubai's residential landscape through to 2030. Historical supply trends up to 2025. Dubai's real estate market experienced booms and slumps in the years leading up to 2025, heavily influenced by supply cycles. After a peak construction wave in the early 2010s, the market saw a period of excess supply and then softening demand from about 2015 to 2019, which really put downward pressure on the prices. By late 2010s, developers slowed new launches, and this, coupled with a spike in demand post this 2020, led to a much tighter supply scenario that we're faced in right now. Notably, in 2024, we had the fewest home completions in 6 years, with only 27,000 new residential units delivered amid a population surge. This supply slowdown, partly due to the pandemic-related construction delays and cautious developers' sentiment, coincided with a demand boom as Dubai's population grew by a record of 170,000 in 2024 alone. The result was rapid absorption of existing inventory. Established villa communities such as Arabian Ranches 1 and 2, the Meadows, the Lakes, Jumeirah Park, Emirates Hills, Al Barari, the Villa in Dubai Land were largely built out of the mid-2010s, contributing little to new supply in recent years. With no new units being added to these areas, any increase in demand directly translates into higher occupancy and rising prices. For example, villa values in Emirates Hills, a prime, full established luxury community, climbed by over 30% year on year in 2024 amid scarce availability. So by 2023 and 2024, inventory in many prime villa locations was extremely tight. Vacancies in popular districts fell to under 10%, indicating a supply-demand imbalance. In contrast, the early 2020s saw a few new completions in developments launched during the mid-2010s. Dubai Hills Estate saw a final phase of villas like Maple and Sidra delivered by around 2020-2022, and Mira Oasis townhouses in Reem were handed over by 2017 to 2019. These deliveries were absorbed so quickly as the market conditions strengthened. So entering into 2025, the context is a market where demand has outpaced the recent delivered supply. The strong post-2020 rebound, fueled by obviously the handling of the pandemic, the economical resilience, and an influx of high net worth expats. This led to record sales and price growth. Dubai's population was actually on track to reach 4 million by the end of 2025. This intensifies housing demand. Yet developers had only just begun ramping up new project launches again in 2022 and 2024 to respond to this demand. The stage was set for a wave of new supply from 2025 onwards, but with a lag time for construction, meaning an interim period of tight supply persisted through 2024. This historical backdrop of supply lagging demand provides important context for 2025 to 2030's outlook. Supply and demand dynamics in 2025, off-plan versus ready. As of 2025, Dubai's villa and townhouse market is categorized by robust demand and bifurcation between ready, completed, and off-plan, under construction segments. Ready properties, the secondary market. The supply of completed ready villas and townhouses is limited and highly sought after. With many communities fully developed, buyers face fierce competition for available listings. Occupancy rates are very high. They're around 89% for residential units overall. And many villa owners are end users or long-term investors holding onto properties, resulting in scant resale inventory. This supply squeeze in the ready market has driven up prices significantly. For instance, average villa sales rose over 30% year on year in 2024 alone. Established neighborhoods like Dubai Hills Estate and Arabian Ranches actually witnessed a surge in demand, up 40% just in 2023, which is expected to persist. These areas offer landscaping amenities and community feels that families and investors highly value. Hence, their ready unit commands premium prices. So, in summary, the ready segment in 2025 is a seller's market. Demand outstrips the available supply, leading to rapid sale prices and appreciation. Off-plan properties, new launches. Sensing the demand, developers have accelerated the launch of new villa and townhouse projects. The off-plan market is booming with buyer interest, as investors and end users alike look to secure future homes. Attractive payment plans and capital appreciation potential makes off-plan purchases very popular. Off-plan sales volumes actually hit a record high in 2023 to 2024, and many launches saw units sell out quickly. For example, Aldar's Haven community, the first two phases, nearly 800 units, sold out immediately upon launch in late 2023. That was because it was Aldar. By early 2025, an estimated 28,351 villas and townhouses were under construction here in Dubai. That's alongside 118,000 apartments. All of these townhouses and villas are slated for delivery by 2028. This represents the upcoming supply pipeline that developers are bringing to market. Notably, much of this new development is concentrated in suburban master communities alongside the growth corridors. This is the 311 and the 611 highways. Off-plan demand has been especially strong for well-conceptualized projects in these areas as buyers anticipate modern infrastructure, lifestyle amenities, and price gains upon completion. While off-plan sales are very robust, the actual supply delivery from these projects will unfold gradually over the second half of this decade. Demand drivers remain strong for both segments, villas and townhouses. Low interest rates, until recent modest rises, high rental yields, and Dubai's safe haven status have attracted a lot of foreign investors. End user demand is propelled by the Emirates' fast growing population and end users' post pandemic preferences for large homes with outdoor spaces, making villas and townhouses more desirable than apartments. Government initiatives like long-term 10-year golden visas for property investors, over 100,000 recipients of these since it launched, have also spurred high net worth individuals to invest in homes in Dubai. This has particularly boosted demand in the luxury segment. So, in summary, 2025's market dynamic sees ready supply playing catch up to the demand, hence high prices and low inventory, while a significant volume of off-plan supply is in the pipeline, marketed amid enthusiastic demand, but yet to be delivered. Upcoming villa and townhouse supply, 2025 to 2030. Between 2025 and 2030, Dubai will witness substantial new supply of villas and townhouses as current projects under development reach their completion and new ones actually start breaking ground. Developers are actively launching master planned communities to meet the housing needs of the coming years. Now I'm going to give you an overview of key communities and projects delivering new villas and townhouses in this period, along with their supply outlook. I'm not going to continue on the upcoming villa and townhouse supply segment because I go into so much detail. I talk about Arabian Ranches 3, Tel Al Gaf, Arabian Ranches 1 and 2, taking it way back, Town Square, Haven by Aldar, Jumeirah Park, the supply, the current unit count, the occupancy rates. Also, talking about Alwood Shoba, the Valley by Emar, it's very detailed. So if you want access to this report, completely free, there's a WhatsApp link in the description of this video. Just send Villa Report to my WhatsApp. That's my personal number. I will send this document to you so that you can study it, so that you can make informed decisions when you're looking at investing in townhouses and villas in Dubai. But for now, let's go back to the video. Appreciation and value trends for 2025 to 2030. Dubai's villa and townhouse sector has seen exceptional price appreciation in recent years, and this is due to the demand-supply mismatch. In 2024, villa prices jumped on average 32% on average. There was higher gains in prime areas. This followed a similar trend in 2021 to 2023, where villas actually led Dubai's real estate recovery, outperforming apartments. So going forward into 2025 to 2030, appreciation is actually expected to continue, but at a more moderate pace as more supply comes online and the market sort of stabilizes. So 2025 to 2026, analysts predict moderate growth in values in the near term. Villa prices are forecasted to rise by roughly 5 to 10% in 2025 on average. Prime luxury communities may see the higher end of this range, given sustained interest from wealthy buyers. While more affordable communities might experience mid to single-digit appreciation. The rationale is that as new inventory off-plan units start to complete, some pressure will be taken off of prices, which is good for buyers. By late 2024, there were early signs of price growth slowing. Quarterly gains for villas have decelerated to like 6.5% in quarter 4 of 2024. However, because demand remains very strong, a price correction is not anticipated in the short term, but rather a gentler upward trajectory, which is good news for buyers again. Rental yields for villas remain healthy. Despite huge price rises, rents also increased by around 6% in 2024, which keeps investment demands intact. Mid to late 2020s, as we approach 2027, 2030, the cumulative new supply of villas and townhouses will be much larger, with projects like Tilal Gaf, Haven, etc. fully delivered. This increased stock should help in bridging the supply gap, potentially leading to a more balanced price dynamic. We may see a plateauing or modest growth in some segments by late 2020s if supply catches up to demand. For instance, if tens of thousands of new units are delivered in 2028 as planned, buyers will have more choice, which could limit excessive price escalation. But that said, Dubai's ambitious economical growth and population plans, aiming for 5.8 million residents by 2040 under the Urban Master Plan, suggests that demand could also keep rising, which might absorb much of the new inventory and new supply. In essence, price trends will likely diverge by segments. Prime and luxury villas, for example, Emirates Hills, Palm Jumeirah, high-end Gulf estates, may continue to appreciate due to global wealth inflows and relative scarcity of ultra-prime homes. Established mid-tier communities like Arabian Ranches 1, 2, and the Meadows will see values sustained by limited supply and their desirability, though their growth may slow as new substitutes become available. New master communities, Arabian Ranches 3, Tel Al Gaf, could see initial price jumps upon handover as early investors flip or end users compete to buy ready units, followed by stabilization once the communities mature and the supply there is fully delivered. Affordable communities, Town Square, the Valley, should maintain steady appreciation in line with general income and rent growth, assuming that Dubai's population growth remains robust. These are also sensitive to economical conditions. Any dip in demand would show here first. It is important to note that Dubai's property market tends to be cyclical. External factors like global interest rates, oil prices affecting regional liquidity, and investor sentiment can influence this cycle. As a mid-decade, sentiment is positive and Dubai is seen as a safe, high-yield market, supporting values. Government regulations like stricter off-plan resale rules or supply management could also be introduced to prevent overheating. Currently, there is no evidence of oversupply-induced price declines in the villa segment. On the contrary, the concern has been undersupply. But by 2030, if all planned projects materialize, we might reach a more normalized market with smaller annual price changes. Low single-digit growth aligns with inflation and GDP growth. Overall, the outlook is for values to appreciate in the coming years, but at a tempered rate compared to the frenzy gains of 2021 to 2024 as new supply injects more balance. Looking ahead, the interplay of all the above factors will shape Dubai's residential landscape in several key ways. A shift to integrated suburban communities. The future of villa and townhouse development in Dubai lies in large master planned communities that offer a city within a city environment. The success of projects like Dubai Hills Estate and Arabian Ranches has set the template. Buyers want green spaces, schools, retail, and leisure options on their doorstep. Upcoming developments like Tel Al Gaf, Haven, Athlone, the Valley are following this model, each with a unique lifestyle theme. May it be beach, lagoon, wellness retreat, active sports, this trend will continue all the way through to 2030 with new projects increasingly emphasizing comprehensive amenities and community living to attract buyers. We can expect future launches to incorporate even more innovative features like urban farming areas, remote working hubs, advanced home technology, and many more. As a developer, they need to start competing and differentiate themselves from other communities. There will be an emphasis on lifestyle and wellness. Dubai's new villa communities are heavily marketing wellness, outdoor recreation, and family-centric living. This reflects consumer preferences that have grown post-pandemic. Developments like Haven and Athlone by Aldar are explicitly designed around wellness and fitness. We anticipate future projects to really double down on these type of themes, perhaps with larger central parks, sports academies, cycling networks like Athlone connecting to this Al Qudra cycling track, and other wellness centers. This sort of responds to the demand for a healthier, community-orientated lifestyle amongst new residents here in Dubai. As this becomes the norm, even established communities might see upgrades. The theme of sustainability and green developments. In line with Dubai's 2040 plan and global trend, sustainability is set to be the cornerstone of future residential projects. Developers are starting to incorporate renewable energy, efficient building designs, and biodiverse landscaping. For example, Shoba's Alwood project touts thousands of trees and a lush environment as a selling point. Going forward, we may see solar panels, electric vehicle infrastructure, recycle water irrigation, and green building certification becoming a standard in new villa communities. This not only caters to environmentally conscious buyers, including overseas investors mindful of ESG factors, but also aligns with our government's goals. Sustainable developments could also enjoy marketing and possibly regulatory incentives, encouraging much more projects. We will see continued foreign investment and luxury segment growth. Dubai's positioning as a global hub means international demand will remain a major force shaping developments. High-profile, ultra-luxury sales, record-breaking mansion deals have emboldened developers to create bespoke luxury enclaves like Elysian Mansions, Tel Al Gaf by Majid Al Futtaim. Up to 2030, we expect more branded or exclusive villa projects targeting ultra high net worth individuals. These could be limited collections of mansions, possibly on new islands like Palm Jebel Ali. Such projects won't add large unit counts but will shape Dubai's image and price ceilings. Simultaneously, foreign investment interests means developers will keep launch payment plans and sales events geared for overseas buyers. Risk of oversupply mitigation? By the end of this decade, one question will be whether supply has overtaken demand. The current data suggests a hefty pipeline, but much of it is calibrated to known demand. Dubai's authorities and major developers, many of which are government-related entities anyway, are likely to modulate the pace of new launches as needed. If the market starts tilting towards oversupply, we may see a slowdown in new project announcements post-2025 until absorption catches up, as it happened in 2015 to 2018 when the glut was forming. Additionally, more developers might focus on completing existing projects on schedule rather than launching too many new ones concurrently. This agile approach will shape how the latter part of this decade plays out in terms of additional supply beyond what's already announced. In conclusion, Dubai's villa and townhouse market for 2025-2030 is poised for significant expansion. Guided by strategic planning and sustained demand, supply will markedly increase as numerous communities materialize across the city's emerging residential belt. Demand, buoyed by population growth and investment appeal, is expected to rise in tandem, though perhaps not as fiercely as in the early 2020s. Government policies and infrastructure will act as enablers, ensuring new developments are supported and aligned with Dubai's long-term vision. We can anticipate a more balanced market by 2030, one with a wider array of housing options, more moderate price growths, and high quality communities that cater to a diverse lifestyle. The period will likely be remembered for transforming Dubai's residential geography, extending the city's suburban frontier while cementing its reputation as a top global destination for upscale villa living. So that's just the tip of the iceberg when it comes to the information that you need to take into consideration when you're looking at investing in Dubai's real estate market, specifically today focused on the villa and townhouse segment of this city. So if you need more information, or if you're curious to know which of these new launches and upcoming launches are the best to meet your objectives, there's a link in the description of this video that takes you to my calendar. You can schedule a time completely free for 30 minutes. You can choose a day, choose a time, and we can go through a detailed analysis, work out a plan to effectively execute your investment strategies to meet those goals that you have. There's a second link in the description of this video, which takes you directly to my personal number on WhatsApp. You can ask me any questions that you might have, and we can discuss and put a plan in place for you to take advantage of the next half of this decade in the villa and townhouse segment of Dubai's real estate market. I am your real estate mate, because clearly everybody needs a mate in real estate.